Hello and welcome to Baatchit with Cafemutual. Today we are at the Cafemutual Passives Conference 2025. I'm Sohail Chagla and I'm joined by Gajendra Kothari of Etika Well, co-founder. So how do you do today?
Very good, sir. Thank you for having me here. It's always good to be at Cafe Mutual conferences. I think you bring in a lot of perspective, amazing guests. So it's a great vibe coming here.
And likewise, it's a pleasure having you. And the first question I'd like to ask is, you're an MFD who sells passives. So how did your passives journey begin?
So see what happens. Passive in US has been one of the largest space, and as markets evolve, it's very difficult over a period of time to beat the markets, right? So, you can't say no to this idea completely. And maybe when you start investing your own money in passives, you then go more deeper into it. You understand how it works and how it is different from this thing. And over a period of time, you are seeing for yourself that whether this is working or not. So if I'm convinced, let's say in 3-5 years time, yes, it has been a lot of my active funds, then I would become more and more increasingly looking into that.
Right.
And one more thing I've realized that today in passives, the cost structures are very low. So that also adds to the alpha
Right.
in the thing. And I believe for a newbie investor, passive is a great way to get into it. And then over a period of time, once he becomes more informed and empowered, he can look at active as a kind of an addition into his passive bucket. But I believe that Nifty 500, which is like a total market index fund, can be a great fund for any investor to have that, and then compare with other active funds to see which basket is doing well.
All right. And speaking on the investor side of things, where do you go when it comes to the growth of passives? In terms of AUM, it's now 11.55 lakh crore as of April 25. That's a 23% growth over the last year. So do you see this demand from the investors? How have investor attitudes towards passive funds changed?
So I believe that investors generally chase performance, most investors.
Right.
There are phases in the market when actives will do well, because when market breadths are limited, we saw in 2020 when certain quality stocks were only doing well.
Right.
That is when passive will do much better than active, because an active fund will have 50 stocks. They won't have the entire portfolio 5-10 stocks, right? So there will be periods when active will do well. There will be periods when passives do well. If you can identify that, nothing like it, that's a great combination, but it's easier said than done.
Right.
So that is why I said that to begin with, anybody can have 20-25% of their portfolio in passives, and then see how it pans out, right?
Right.
So that's what I do. I always like to first invest, see the performance over period of time, compare it to active, and then take a more nuanced call. Where should I be betting?
All right. Now, I'd like to follow up on that. You spoke about yourself, but I'd like to understand your perspective towards other MFDs. For MFDs who have not yet started distributing passive funds, what advice would you give them?
See, I would say just go with the merit of the product. If passives are beating actives,
Right.
see, in my case, certainly I still feel that a good mutual fund distributor can identify few products in active space, which over a period of time has the possibility to beat the markets. There are fund managers over a period of time can do it, right? Not the entire market. So you have to be doing some bit of research. But if you don't have that capacity or that capability to do that, then add passives also, because by adding passives, you're still there, right?
Right.
You're not the bench. You may lose out on that 0.5% or 1% alpha, but at least you're getting market kind of returns. And if you're not doing that, you're losing customer. Eventually, we have to do what is good for the customer. So today, of course, even at Etika, we have a large active share, but I'm quite okay that in 10 years' time, if passives are doing much better than actives, I'm willing to change my entire portfolio allocation from active to passive. I'll first begin my own. If I am convinced, then I'll shift my investors also. Finally, you have to do what is right for the customer, right? And see, I also feel that most of the MFDs today are not doing passives because margins are very less, which is rightfully so, right? You cannot build your distribution or advisory business on 20 paisa business or 25 paisa business because there's a cost involved. You have to meet customers, right? Mutual funds don't have to meet customers, right? It's a automated platform, but we MFDs have to meet investors, and there is a cost there. But I believe in next 5-7 years, uh, I believe that when there is more flexibility on the RIA platforms, where I can charge fees automatically from the portfolio itself, and I may charge 0.5% fees for my advice, goal-based planning, risk profiling. Then, and if passives are doing well, why then I should really differentiate? I'm getting fees from the customer, 0.5%. Whether I advise active, passive doesn't matter. I will only focus on which is the right product, where customer is winning. So I think I don't see that day very far. In next 2, 3, 5 years, we'll have platforms in India just like we have in the US. You will become product agnostic. You'll become active, passive agnostic. You will see what product makes sense for the customer. And you are anyway charging your customer, so you're making money from customer. It doesn't really matter then.
Right. Yeah. No, that makes complete sense. That's brilliant
That
insight.
I think will have a huge transition for all good quality MFTs who would not want to miss out, right? See, today all customers come to me because of my advice. They're not coming to me for active or passive. This is what you will tell me. I'll go with that. So I have to be absolutely agnostic on that size. Right now, of course, because passives pay very less, and on some hand I still feel in next 5, 7, 10 years there will be still good scope for active as well. Good fund managers will beat the market, right? So that is where your capability as a good research house will help you a lot.
That's brilliant insight. And I'd like to ask you one final question is, as a MFD, how do you shortlist passive funds for your clients? What metrics do you usually consider?
So within passives, of course, we try to keep it simple. We don't try to complicate it.
Right.
Generally, like I've always believed in US, S&P 500 has done wonderfully well. In India right now, of course, the more focus is on Nifty 50, which as an index. But I believe over the next 3, 4, 5 years, Nifty 500 or to begin with Nifty 250 can become a great product. Because in India, I still believe mid and small cap has a lot more role to play in wealth creation. So which cannot come in Nifty 50. So that is why if you have Nifty 500, you have large cap, mid cap, and small cap as well. And and the data says that over the last 20 years, Nifty 500 has beaten Nifty 50 by 2 percentage points. That's a huge difference. So I would like to consider more Nifty 500 as a basket. And then, of course, we are also kind of actively monitoring factor space. And if we are able to identify that there are these couple of factors which consistently over a long period of time beat other factors, like it is momentum or quality. So when we have that confidence that, okay, these factors are making a huge difference, we will start adding few factor funds based on the merits completely.
Right. Right. So that's it for my questions. And I'd like to ask you, is there any outlook you'd like to give to our viewers on the future of passive? What's your opinion? How do you think the next 5 years go?
My whole philosophy, Suhail, is that just keep yourself open-minded, right? Don't be close-ended, think that, okay, this will work, this will not work. Markets do not operate in black and white. It's always a shade of gray. So you have to change your opinion when the facts change.
Right.
You should be ready for
to adapt.
Right? Don't be stubborn with your thinking. What worked 10 years back may not work in the next 10 years. So be open to ideas, and that's where I think coming to these kind of conferences, when you hear other good speakers, share their insights, I think you open up. And I've heard somewhere is that the opposite of a good idea can also be a good idea, right? So it's not that active opposite passive is bad. Passives can also be good. So if you're open, I think it will help the entire fraternity.
Well, all right then, and thank you for your brilliant insights.
Pleasure.
And that's it for this time on Baatchit with Cafemutual. I'm Suhail Chagla, and thank you to Gajendra Kothari.
Thank you.